Hi there, this is Bill with Smart Trades. It's Sunday 3/14, otherwise known as Pi Day over at MIT. Anyway, just a quick update on the charts and looking at the through the close Friday on the S&P Cash 130-minute chart. A couple things I'd like to bring your attention to. First of all, that there were momentum divergences based on the ADX and non-confirmation in breadth on this latest rally. Additionally, looking at my favorite count here, which is that we have an ABC decline, which I'll call A, and then an ensuing ABC rally. A will equal C almost right on Friday's high. We shall see if that's it or not, but that's a very nice fit, and particularly combined with the divergences both in breadth and momentum. Additionally, the ABC, obviously, the equality there is a nice fit and a typical pattern. And additionally, within B, we can count 5 waves up. 1, 2, 3, possible triangle, 4, and then 5 up to a new high. That also the fact that it terminated just above the previous high in the S&P, that's a typical termination point for a B wave in a flat. So we would expect, if that's the case, a C wave would take us down just below the bottom of A. But we'll have to watch that unfold, and as always, we'll take it one step at a time. Here's the 240-minute S&P futures, and same thing. You can see here our A equals C target, the possible triangle fourth wave, which is just is typical in a fourth wave position prior to termination of a pattern. So we'll see how that works out, but so far a pretty nice looking ABC with a 5-wave C equal to A, and a very nice terminal pattern. Okay, just to review my last update, I wanted to emphasize that I don't necessarily favor that this is an impulse wave up. That said, when you just you ignore the internals a little bit and just look at it on the surface, it's hard to ignore the possibility that indeed we do have 5 waves up. We have 2 similar magnitude corrections in the wave 2 and possible wave 4, or A of 4 position. Moreover, we have a fairly extended wave 3, and the bottom line is we've already made new highs, so you've got to count this as a corrective decline by definition, since we've already made a new high. Again, I favor that that's just A of the corrective decline, and we shall see. But the fact is, we've made a new high here on the NASDAQ and the S&P Cash, as shown here. Now here's my favorite count in that we've got a possible ABC of A, and then we have a ongoing correction with A down, B back up to a moderate new high, and then a C wave that'll take us down to, for a possible B wave. It's too early to tell to really label the internals of what's to come, but the bottom line is, again, that the fact that we've made a new high, by definition, this has got to be a corrective decline at A of B. At any rate, again, we'll see how it goes, but for right now, we're looking for a peak and then a drop down. Okay, and also how that fits into the bigger picture. Here's the S&P Cash monthly chart, and again, I count this entire decline from the 2000 peak as an A down, B up, and C most likely of a larger corrective pattern. And the implication, the fact that we've basically put in one flat here, a flat being where C terminates just below the bottom of A. The implication is that we are perhaps doing a double flat, or perhaps a triangle, something of that nature. And from here, what I favor is a small rally, a larger B wave decline, and then perhaps back up to the old highs. I see that as a possibility in a very long multi-month, multi-year flat pattern, which could terminate as far out as 2015, 2020, 2017 is the ideal target. But that obviously is open to updates as we head out into the future. And someone made a comment that that impulse type pattern doesn't that I've labeled doesn't really fit into a typical Elliott wave channel. Well, the bottom line is it really can. You know, I don't favor that this is an impulse wave necessarily. I'm just saying that it possibly could be. And if you connect the top of wave 1 and the top of wave 3, draw a perfectly parallel channel and start at the bottom of wave 2, it connects almost perfectly with the close at the bottom of what's labeled so far as wave 4. Throwover from these channels is typical and to be expected. So you know, this little throwover at wave 4, or the possibility that we're going to throw over again in C of 4, if indeed this is an impulse, which again is just in my mind a possibility. We shall see. But the bottom line is the channels actually fit pretty well, and it looks pretty good to me, you know. Anyway, on to the very short-term pattern. And here is the S&P futures, including the open on Sunday. And we can see our triangle. We can count from there 1, 2, 3, 4, possible fifth wave up, a termination point, an impulse wave down, and from there we have what appears to be a corrective rally, A up, B down, and perhaps C of wave 2 forming or completing here shortly. And the implication obviously is that wave 3 to the downside is yet to come, and lower prices. We shall see if indeed that's the case. Friday's highs need to hold. So let's wait and see, and again take it one step at a time. But right now it looks like an impulse down and a correction back up. So the implication is lower prices to come. Anyway, thanks for watching. Have a good one. Bye-bye.